Hello everyone, my name is Alok Bhanushali and I'm from CKT ACS College New Panvel and Department of Accounting and Finance. Today our topic will type of hybrid mutual fund. So basically what is hybrid mutual fund schemes? So hybrid mutual funds are investment that combines two or more asset classes, which is equity and debt in a single portfolio. The goal of hybrid mutual fund is to balance risk and return by diversifying investment across different asset types. So in this mutual fund, we invest both in equity and debt in one fund. The key features are: first, it is an asset mix. So there are basically two or more asset mix are there. First is equity, which provide growth potential. Second is debt, which offers stability and regular income. Some fund may also include gold or other asset like real estate or derivative, commodity market, etc. The risk profile for a mutual hybrid mutual fund is lower than pure equity fund but higher than debt fund. So the return will be less compared to equity fund, but it will be higher compared to debt fund, and varies based on the equity debt allocation. If equity is more, the return will be more. If the debt is more, then return will be less. Benefits are diversified, reduced overall risk. So in this mutual funds, diversification is the key role playing, which reduce the overall risk of the fund, and it is suitable for moderate risk takers, and the fund management who handle this fund are professional. Now who should invest in this? So the new investors who are seeking a balanced approach and that looking for a mix of growth and income, and investor with moderate risk tolerance. Now these are the types of hybrid mutual fund. First is aggressive hybrid fund, second is balanced hybrid fund, third is conservative hybrid fund, fourth is a dynamic asset allocation fund, fifth is multi asset allocation fund, sixth is arbitrage fund, and seventh is equity savings fund. So we will see one by one hybrid fund in details. First of all, we will talk about conservative hybrid fund. Now what is conservative hybrid fund? In this, we invest equity up to 10 to 25% only, and we invest more money in debt, which is 75 to 90%. So in this, the majority of the investment is done in debt market, and equity market the investment is low. What is the objective? The objective for the conservative hybrid fund is focuses on capital preservation and steady income by investing predominantly in debt instrument with a small portion in equity. The risk level in conservative hybrid fund is low to moderate, so return will be also low and moderate. Now who can invest? Who's the whom for whom this conservative hybrid fund is there? So the investor with low risk appetite and those looking for regular income with some exposure to equity. So it is ideally for that investors. Second is balanced hybrid fund. Now what is balanced hybrid fund? So in this, asset allocation is done on balance mode. It means equity, it can be 40 to 60% and debt 40 to 60%. So there is a balance in this. The objective for the balanced hybrid funds, so its aim to equally balance growth and income. So any investors who want growth and income in a balanced manner, in an equal manner, so he can invest in balanced hybrid fund. It provides stability also through debt market and growth also through equity market. The risk level in this are moderate because equity percentage are 40 to 60. So there is a moderate risk level. And for whom these funds are good? So ideally it is for first time mutual fund investor and those wanting 50-50 exposure to both equity and debt. So any investor who ideally want to invest their money, who are a first time mutual fund, so they can go for balanced hybrid fund. So there will be a chance of 50-50 exposure in equity and debt. It means they will get an exposure of income and growth. Third is aggressive hybrid fund. Now what is aggressive hybrid fund? In this, we invest our funds majority in equity and less in debt. So in equity, 65% to 80% of asset are allocated in this, and 20 to 35% of debt instruments are purchased in this fund. So the objective of this aggressive hybrid fund are focus on capital appreciation by investing a higher portion in equity with cushioning with the debt. So majority of the money will be invested in capital market or equity market, and less amount will be invested in debt market for reducing the risk. The risk level will be moderately high. So similar way, the return will also be moderately high compared to balanced hybrid fund and conservative hybrid fund. So aggressive hybrid fund is a very good option for those who want to take a risk and who want to be aggressive in the market. So ideally, for whom this investment is good, so the person, so the investor who is investing their money for long term. If it is for short term, then this will be a very risky capital. Why? Because for a short term, the market will be very fluctuating, so there is a chances of risk. But if you are investing long term, so this will be good. And those young investors who are comfortable with market volatility, means the person, the investors who are very young, who are earning some income, and they are very comfortable to take the risk, so they can go for aggressive hybrid fund. Fourth type of hybrid fund is dynamic asset allocation or balance advantage fund. Now, what is dynamic asset allocation? So here it is a very dynamic in nature. यहाँ पे in this thing there is no equity or a debt proportionate या portion is there. It is fully dynamic. It depends upon the market valuation of proprietary models. So there will be 80% debt, 20% equity, or 80% equity, 20% debt, and in future the percentage, the proportion will be changing between equity and debt dynamically. So this fund are very dynamic in nature. They invest as per the market situation. If market is good for investment, the majority of the amount will be invested in equity funds. If the market is not good for the investment, the majority of investment will be in debt market. Now the objective is to adjust equity and debt mix actively based on the market condition. If you want to reducing risk during volatility and increasing allocation during bullish phase. Third, the risk level is moderate to high. It depends upon the current allocation. If the allocation is more on debt and less in equity, then the risk is moderate. And if the allocation is more on equity and less in debt, then the risk level will be high. And the profit or the return will also depend upon the dynamics of the allocation. Now, ideally, for whom investor this is good? The investor uncertain about market direction. Those investors who are uncertain about the market direction, and those wanting a set and forget product with automatic allocation shift. Yani, means those who having not who does not have any kind of knowledge about the market, who just want to invest the money and they forget the money. The fund manager will automatically allocate this fund depending upon the market condition. So dynamic asset allocation is a very good, or very recently very uh, uh, what we can say, um, best for the investors who can handle or who can grab the opportunity of the market. Fifth is multi-asset allocation fund. Now, what is multi-asset allocation fund? So in this mutual fund, minimum 10% each in at least 3 or more asset classes. We use usually equity, debt, gold, commodity, REITs, international funds. So in this, there are multiple asset allocation is there. Recently, we have seen, now we have seen in arbitrage, in advanced hybrid mutual fund, balanced hybrid mutual fund, aggressive hybrid mutual fund, the asset allocation was between only equity and debt. But in multi allocation, there can be gold also, commodities also, real estates also, and international funds also. So yeah, in this, multiple assets are there. At least 3 assets are there, at least 3 or more. The objective, simple: diversification across uncorrelated asset to reduce overall portfolio risk and benefits from multiple asset cycle. So the objective is simple: we have to invest in a various of asset to diversify our amount, our money, to reduce the risk overall risk of the fund. The risk level will be moderate to high. It is also depend on the asset mix. Gold and international exposure can add non-market correlation also. So the risk level is moderate to high. It depends upon the uh, how much amount you have invested in any asset class. Ideally, it is for investors looking for broad diversification. Investors looking for broad diversification, they can invest in multiple assets. Those investors who want more asset classes, who want to invest in equity also, in debentures also, in bonds also, in commodity market also, in real estate also, in gold also, they can go for multi-asset allocation. And those who want exposure to commodities or international market, so they can invest their money in multi-asset allocation fund. Now, what is arbitrage fund? Arbitrage fund are equity hedging position. Hedging position basically means to acquire the opportunity in the market. If there is an opportunity to earn the money, so the money will be what we can say earned by this position, that is hedge position. Strategy to reduce the risk level by investing more in the market. So there is a strategy for hedge position. Minimum 65% in equity and remaining are debt and cash. Remaining monies are invested in debt and in cash also. So basically in arbitrage fund, we are what we can say, we are in an opportunity to earn the money due to the market price differences. So basically there are two stock exchange listed. One is Bombay Stock Exchange, another is National Stock Exchange. So if the price of any shares, if any shares are different in both the market, in Bombay Stock Exchange, say for example the price is 10 rupees, and in National Stock Exchange the price is say between 15 rupees. So what we can do, we can purchase from Bombay Stock Exchange and we can sell in National Stock Exchange. We can purchase Bombay Stock Exchange from 10 for 10 rupees, and we can sell that uh, investment or sell that assets in National Stock Exchange till the price will become similar. Okay, so that is called as arbitrage fund. So objective, it is a objective to earn risk-free return. Now why it is risk-free return? Because we are purchasing at low price and we are selling it at higher price. Why? Because of market price differences between cash and future markets, low volatility. So if there is two markets involved, one in Bombay Stock Exchange and National Stock Exchange, any fund are listed in both the market with a different prices. So what we can do, we can purchase more at low price from one market and we can sell that at a higher price in the second market till the price become the same. So there is no risk level. Similarly, risk level is very low in this. Why? Because we are selling it in a high price and purchasing at a low price. Ideally for whom? Ideally it is for short term parking of funds, those who want to invest those money for short term, and investor in higher tax bracket looking for low risk tax efficient return. So this is good for that. And the last one is equity saving fund. Equity saving fund, in this asset allocation, 65% or more are invested in equity, which include arbitrage. So yeah, in this we invest in equity also, and we are investing in the arbitrage fund also. Similarly, in last arbitrage fund we have studied what is arbitrage and how it is done. So in this equity saving fund, we are investing in equity also, and we are including arbitrage fund also, and we invest debt and unhedged equity also. So in this we are investing in equity, we are investing in debt, and we are investing in hedging market. Second, objectives, it combines arbitrage, equity and debt for stable returns with low volatility and better tax treatment. So in this we are combining equity market, debt market and arbitrage market also. Risk level is moderate. Why? Because there is an arbitrage and there is an equity also. If equity are involved, the risk level will be moderate. It less risky than aggressive hybrid due to hedge equity, but more stable than pure equity fund. So it is less risky than aggressive hybrid fund. Why? Because it include hedge equity also, means arbitrage also. Ideally for moderate risk investors and those looking for regular income with some market participation, and those want the tax efficiency. So these are the types of the hybrid mutual funds which are involved in the mutual fund market. Next lecture, we will study about types of equity mutual fund. So in the hybrid mutual fund, it is a combination of equity and debt mutual fund. Now we will study in the next lecture what are the types of equity mutual fund and what are the types of debt mutual fund. Okay, till then, thank you. Bye bye. See you in next video.